2020 has been an absolutely crazy year to say the very least. We've seen the stock markets crash worldwide, and we've seen the countries around the world go into lengthy lockdowns. And we've also seen massive business closures and the unemployment rate go up significantly around the world. However, as we head into 2021, asset prices are at record highs. Real estate in Australia is more expensive than ever. Silver and gold has reached record highs. Bitcoin and the stock market have been going absolutely ballistic since March. And it is safe to say that almost all asset classes are at record highs right now. So we have to ask ourselves, why do we have this disconnect between the real world, where there's massive unemployment, business closures, and asset prices which are at record highs? In today's video, we will discuss why the Australian government and the Reserve Bank of Australia will do everything they can to increase asset prices. This video will be broken down into 4 parts. The first part will explain why inflation is so important to the government and the Reserve Bank of Australia, and what role it plays in our monetary system. The second part will explain what higher asset prices will mean for the Australian economy. The third part will talk about why the rich demand higher asset prices, and just how much influence they have on our key decision makers and monetary system. And finally, the last part will explain why politicians themselves might want higher asset prices. Before I start this video, I just want to make sure that you guys understand that this is only my personal opinion and definitely not financial advice. However, if you do find value in this video, please do me a huge favor by hitting the like button right there, subscribing to my channel, and sharing it with your friends. It will really help me out a ton because it takes a long time to film, edit, and publish these videos. So without further ado, let's get straight into it. Let's talk about inflation. It can be defined as a decrease in the purchasing power of money, reflected in a general increase in the price of goods and services in an economy. This means due to inflation, the money me and you have will be able to buy less and less every single year. So why on earth will the Australian government and the Reserve Bank of Australia want this to happen? Why do they want higher inflation and for our money to be worth less? There are numerous reasons why Australia has an inflation target of 2 to 3%. But the main reason is that inflation drives investment and consumption. To put simply, inflation encourages us to spend our money. At the end of the day, the government wants you to spend your money so the businesses can stay open. That way, the businesses can repay their loans to the bank, and the bank can then pay its workers, pay its taxes, and pay its insurance policies, and the cycle goes on and on and on. Inflation in this simple form will also lead to higher asset prices as real estate becomes more expensive, as there's more and more money circulating around the Australian economy. And this explains why the Australian government and the Reserve Bank of Australia want higher asset prices, just to keep things going and ticking along. However, another way to look at inflation is to look at it from the debt serviceability perspective. This can get a bit confusing, so let me try to explain this as well as I can. When the government borrows money to stimulate the economy like it has been doing in the last few months, the debt that they create by printing money is something that can be inflated away. For example, if the government borrows $10 billion today and the inflation rate is currently at 2%, it will be much better for the government to pay back that $10 billion later down the track, because that $10 billion will have less purchasing power 10 years down the track compared to today. However, this is where it gets really tricky. While inflation can be beneficial to the economy when used correctly, if used incorrectly, it can lead to hyperinflation. Now, we have all seen this photo. This is what hyperinflation can lead to. As our currency or money starts to lose its value, we will need more of it to purchase the same goods and services. Hyperinflation not only makes us less wealthy, it also leads to some very devastating economic consequences. While inflation in 2020 has been higher than usual, we are not at risk of hyperinflation just yet. However, if we keep going down this path of printing billions and billions of dollars and injecting it into the economy, inflation will become higher and higher in the years to come, and this could be problematic. Now let's move on and talk about what higher asset prices mean for the Australian economy. The most common misconception is that higher asset prices will lead to inequality and be bad for the Australian economy. While higher asset prices will lead to a greater gap between the haves and the have-nots, it does not necessarily mean it is bad for the economy. There are a number of different factors associated with higher asset prices, so let's take a look into those. The first factor associated with higher asset prices is that higher asset prices will make Australians feel wealthy. So as your home improves in value or your stocks grow in value, you will feel more wealthy. So what do you do when you feel wealthy? Well, the first thing that most of us do is spend more money. And when we spend more money, the money goes back into the economy, which helps businesses grow. And businesses will then be able to take on more workers, and this positive effect is passed on throughout the economy. In a time like this, where Australia is experiencing one of the worst economic shocks in Australian history, I think the RBA and the government should be doing everything they can to boost consumer confidence, and unfortunately for some, this is one of the best ways to do it. While higher asset prices might not be the most fair way to boost consumer confidence, it is definitely an effective way to do so. And this is reflected in the Consumer Confidence Index, which has recently reached a 2-year high. Another way to look at this is to look at things from the alternative. What would happen if Australia had lower asset prices? What would that mean for Australians and the Australian economy? So when your family home or your investments are losing value, how does that make you feel? Well, it makes you feel poor. You become less wealthy as everything you own is decreasing in value. So what happens when you feel less wealthy? It makes you not want to spend money. This will have a very dramatic effect on the Australian economy. Consumer confidence will drop to a very low level, and people will pretty much stop spending money on anything that they don't need. So what would that mean for businesses and its workers? Well, the answer is not pretty. Businesses will close down and its workers will be made redundant. And this is what we would have seen if the Australian government did not announce the JobKeeper scheme. The scenario we just discussed is based on a lower asset price and lower consumer confidence. Let's talk about an extreme scenario where asset prices crash by 40%. What will happen then? In fact, this was a scenario that a lot of experts were predicting in March when all of this first started. And to my surprise, a lot of everyday Australians were happy about this. They wanted this to happen so they could buy houses for dirt cheap. However, let me tell you right now, that will be the last thing we want, because if it had happened, we'll all be screwed. A 40% crash in the Australian real estate market would be absolutely devastating. It doesn't just mean lower consumer confidence, we also mean that a lot of homeowners will now have negative equity, meaning that a lot of them will be forced to sell their house into a very bad market, meaning they will take the hit and lose pretty much their entire life savings. And this will also mean that a lot of banks will fail. And we're not talking about the hedge fund banks or the big investment banks. We're talking about everyday banks that hold your money. Based on the 3 scenarios we just mentioned, one with higher asset prices, one with decreasing asset prices, and one with a crash in asset prices, we can see why the Australian government and the RBA want to achieve higher asset prices. However, are they doing this purely for the good of the Australian economy, or are there other factors that might have influenced their decision? Let's talk about something that is very controversial. Does the government protect the rich? I know this is a very sensitive topic, and I know a lot of you guys are not going to agree with me, and that is fine. I want you to do your own research and form your own personal opinions. Governments are a system designed to protect every member of a society, and it shouldn't matter whether you are rich, poor, unemployed, or a CEO of a billion-dollar company. However, it can be argued that the rich have a higher level of influence compared to the average Australian. Let's talk about this in a bit more detail. Let's start with how politicians get into the position of making key important financial decisions. Obviously, a politician needs a few things to succeed in office: charisma, intelligence, and a face that people can trust. However, if you look beneath the surface, there is an important factor that makes a huge difference on who gets elected and who doesn't. And that is how much money they put towards their campaigns to get their face seen by as many people as possible. Think about all the letters that you receive in your mailbox and all the ads that you see on television. Those are definitely not free, and they are definitely not cheap. Someone running for office could have the best policies in the world, or a cure for cancer, but without enough marketing dollars, no one in the world will know who they are and what they stand for. This is where political donations come in, where the rich can donate money towards political campaigns. The rich are not going to donate from the goodness of their hearts. Well, some do, but most of donations have hidden agendas. So what does all of this have to do with higher asset prices? Well, the link here is that rich people own assets. They own companies, they own shares, they own houses, they own planes, and other investments that they want to see grow in value. And if a politician makes decisions that lead to lower asset prices, what do you think will happen when they run for office again? Now, does all of this have an influence on the decisions of the RBA and the government? While I know exactly what my answer is, I want you to do your own research and form your own personal opinion. Now, let's move on to the final part. Do politicians themselves want higher asset prices? Once again, guys, this is only my personal opinion. Please don't take my word for it and do your own research. I'm just some Asian guy on YouTube who's having a rant. You guys know how much I love numbers, so let's start with some numbers. According to this article, out of the 225 federal politicians in Australia, they have a combined $370 million tied up in real estate. And this number is based off the 561 properties declared by these politicians at the average dwelling price in Australia of $656,000. Personally, I think the number of $370 million is extremely low because the politicians are a rich bunch and the houses and the mansions they live in are definitely not the average dwelling. And it's definitely worth more than the average price of $656,000. And this is just real estate. And we haven't even talked about stocks and other assets. And as you can see, politicians themselves will definitely benefit a lot from higher asset prices because they themselves own a lot of assets. And once again, does all of this have any influence on their decisions and their monetary policies? I'll let you, the viewer, decide. Please leave your comments in the comment section below, and I'd love to have a chat with you about this. Based on what we are seeing in Australia and other countries, the central banks and the governments want higher asset prices, and they are getting exactly that. I know what you are thinking. Is any of this sustainable? Can the governments and central banks keep inflating asset prices with all of this stimulus and money printing? The answer is probably no. Somewhere down the track, somebody will have to pay for all of this. But that is not likely to happen anytime soon. I know this system is not perfect and that a lot of people are going to be treated unfairly by this system. However, it is the only system that we have. So instead of complaining about how bad the system is and how bad the governments are, maybe we should try to learn the right information so that we can position ourselves to benefit from this bad system. I'm not a financial advisor and I can't give you financial advice, but what I can tell you is that I am increasing my investments in all asset classes: real estate, stocks, gold and silver, and cryptocurrency. Alright guys, this brings us to the end of the video. I had a lot of fun making this video. I hope you guys enjoyed it. If you did, do me a huge favor, hit that like button and subscribe to my channel for more content just like this. And I will see all of you guys in the next video.